Hey, good morning, traders and investors, and welcome back to our Wednesday live stream show. I'm your host, Bennett with TradingAnalysis.com. We appreciate you all taking time out of your busy Wednesday mornings to join us. Can't believe we are already approaching the July Fed decision. Earnings season is upon us. Netflix kicked it off last night. Banks kicked it off last week. Markets have seen a fairly decent move up from last Thursday's gap to the downside. Last Thursday's gap to the downside was met with support. We've seen a pretty sizable move back to the upside in the indexes. The question now becomes, is the correction complete? Can we ink out the June lows as the end of the corrective retracement? And are we gearing up for upside continuation? We're going to take a look at earnings coming up. We've got a good show in store for you. I do apologize for not being with you all last week. It was about 1:30 in the morning here. We actually lost power, and I didn't get it back on until shortly before market open. So thanks to Todd and the team for jumping in there and delivering the content to you all. So hey, let's bring in the trading analysis team. Good morning, Terry, and good morning, Alex. How are you doing today?
Morning, fellas.
Howdy, howdy.
Yeah, I hear it's a hot one in Austin this week.
We went from
degrees for like 3 weeks straight.
Yep. We went from the coldest winter to now like the hottest summer. So it's wild. It's wild.
Welcome to Texas.
That's right. What's up, Alex? Good
How
afternoon,
you doing,
sir.
Alex?
Yeah, nothing much. Just prepping to go on a small vacation. Cryptos are moving up, so lots of excitement there.
Oh, for sure. Big move up in Ethereum.
Yeah, in others, decent moves. So we are not out of the woods yet, but these moves kind of reached, some of them reached equality or measured move, and if we go on the upside, so we can almost count that we have pure impulse from the lows.
I love it.
Which will, of course, means that the rally will continue.
Definitely. And, it's like when we got down to that fourth wave support, initially we weren't really seeing signs of life, but support held. We had a nice little base put in there near 20K in Bitcoin, and the move up has continued. We're actually looking at some speculative longs on the stock side with our clients, taking a look at Mara breaking out, Riot. There's some interesting ways in which we can kind of express that sentiment. So good stuff. We've got Crypto Lab tomorrow morning. Yes, 9 a.m.?
Yeah, as usual.
Awesome. Good stuff. Hey, before we jump into the charts, let's just quickly take a look together at the earnings calendar. So we've got Wednesday this morning, we had ASML report. After the close, we get Tesla. We also have Alcoa. That's an interesting chart that's seen a sizable move up, completed a 5-wave impulse, and it's in the process of correcting. Any other names of interest that stand out, Alex, Terry, either one of you? I know we've got next week some other names of interest. Twitter, we've got Twitter reporting Friday before the open. That should be an interesting one with everything happening there. Discover today after the close.
Beat their earnings pretty good. They came in at 377 a share with consensus was 351. So That's pretty good. Even the earnings whisper was only 361. Abbott Labs beat their earnings this morning. So did the Nasdaq, and Baker Hughes, believe it or not, the oil service giant, missed. It missed on its whisper.
Interesting,
Only came
yeah.
in with 11 cents earnings. Can you believe that? That makes no sense. All these rigs that are running out there and growing continuously. How the hell did Baker Hughes? I think what it was the big write down for exiting Russia. Maybe that hit their balance sheet this quarter.
Yeah, we'll have to take a look at that one. ASML, as Terry mentioned, with the beat, relatively quiet, muted price action this morning, likely due to the facts that that as you saw, bottom left-hand corner of your screen in the intro, futures are slightly lower. We'll take a look at the wave counts here in just a minute. Okay, so we've got a lot coming up here. A big week, Fed decision a week from today. We've got PCE next Friday. We just had a very hot CPI print for the month of June. Many are wondering if crude oil will continue lower or if the consolidation effort is just that with the resolve on the upside. Alex can take a look at the macro scene. Any other requests? If you have them, drop them in. All right, so let's hit it. I'm going to take you through the indexes. Gentlemen, I'll be back on the other side, and we'll carry on from there. Anything specific that you would like me to cover?
No, do your thing, Bennett.
All righty, sounds good, can do. We'll be back in just a few minutes. All right, let's hit it. Hard right edge of the MotiveWave platform. We're going to keep things rolling here this morning. We're taking a look at price action in the S&P 500, and what we're going to take a look at here is the current development from last week's low. And in addition to the Elliott wave count, I want to provide you with some traditional technicals and levels of interest that I feel are of significance and need to be broken to the upside for this rally to truly confirm. So first of all, let's take a look at price action here in the S&P 500, and zooming in off of the daily chart, we'll move lower in the time frame scale, taking a look at the 1 hour time frame, and you might be thinking, gosh, WXY, what happened? What happened to our ABC? Well, as you all know, the wave count from the January high has always been a bit subjective due to the magnitude of that January 24th through Feb 2nd rally. We've been counting it both ways with our clients at Trading Analysis. We always have a plan B to offer context in the event plan A does not go our way. So looking at the current structure, what I have had to adjust for in the bearish count, and keep in mind, the bearish count simply says we have one additional low potentially on the horizon before this market correction is complete. And I'm ready and willing to pivot to the long side if, in fact, we do confirm the June 17th low as the end of the correction. But looking at this chart, it essentially provides us with a three-wave move to the downside, 3 waves back into March, the May 12th through June 2nd flat, which I continue to view as a flat. I see no other decomposition of that move that would be valid based on the rules and guidelines of Elliott. So looking at that flat, it now occupies a B wave position. And what's really interesting and fascinating about this particular market is the way in which we rejected the high there in June was fairly typical of a move lower in a third wave position. We had 2 acceleration gaps. We were coming out of a flat. So we initially responded with a fairly sharp move to the downside. From the June 16th low, we were anticipating some sort of a corrective retracement. We got to move up into June 28th. We got this sideways 3-wave consolidation. This was last Thursday, and what's interesting about last Thursday is we technically broke short-term uptrend line support in the S&P, not the NASDAQ. We did so in the S&P. We had a gap to the downside. We completed a 5-wave swing, and at that point, it did look as if the higher wave 2 was complete. Instead, and as we knew as an alternate possibility, that low from the 14th actually represented a wave 2 position in the bullish count. We're now seeing upside continuation. And if in fact this A and B wave were 1 and 2, and this was a smaller 1, 2, even in a higher degree C wave, we should have expected the break lower. We haven't seen the break lower. So what I have gone ahead and done here is I've modified the count to suggest it's just a combination of three-wave structures. So we have 5 down into May, ABC flat into June, and what I'm looking for here is a possibility, because I still see another high possible from the dollar. I still see higher in yields. I still see higher in crude. So I don't think we're out of the woods just yet, and I think a couple of days of price action doesn't necessarily immediately confirm the uptrend resumption. So what I'm considering as a possibility is that we're now in a kind of meandering C wave that will ultimately form a contracting ending diagonal. And what I like about this view is it still takes us to my 35.91 1618 objective. That is simply a measurement of the January 4th through January 4th through February 24th decline projected from the late March high. We have yet to meet the 1618 of that. We came very close, but we have not done so. If we take a look at the magnitude of this green A wave, we'll also arrive at our equality projection at 3476. So we've got C and A 3476, 1618 of Y and W at 3591. And when I take a step back, excuse me, it's only been just past a month from my COVID positive or COVID diagnosis, so every now and again a little short of breath and congested. But looking at this level, I see the support, the potential support of significance that I would love to see the markets test to kind of confirm the completion of the correction. Is this zone between 33.93, 35.88? Those levels include previous resistance from September of 20 and the pre-COVID high. That establishes a zone that you'll notice takes us right to those two fib levels I just mentioned, green C and A and the 1618 of Y and W. Off the daily back to the 1 hour time frame, you'll notice this blue trend line. This represents the lower boundary of the corrective channel. We broke south of it, we got above it, set a low, set a lower high, but then set a lower low last Thursday. It's been a very tricky subdivision. And here we are once again trying to break above this lower corrective trend line. So if markets break above resistance and see continuation above those traditional technical levels, which I'm going to talk about in just a minute, then absolutely I will pivot to the bullish wave count. And the bullish wave count would suggest that in fact that June 17th low was all of the C wave. The only difference, instead of this being on an ongoing C wave with an ending diagonal potential, this would represent all of the C wave, and that would complete 3 down, 3 up, and 3 down for an overall 9 major price swing structure. If this is the case, then we've printed a MotiveWave up in a wave 1 position. We have ABC back into last Thursday, and we're now challenging downtrend line resistance. So those traditional technicals that I mentioned, if you take a simple trend line starting from the March high, take that through your June 2nd high, that's a level of interest that I feel markets need to continue above. Backing you off to the daily chart, looking at this on the daily time frame, let's just bring in the standard 50 and 200 moving averages. Zooming in here on price action, this is the first back test, the first true back test of the 50 moving average post break under it. So we had kind of the bearish cross where the 50 crosses on under the longer term 200, and this is really the first back test. So if we can get above trend line resistance and if we can get above the 50-day moving average, I think this market has a good shot at continuation. Semiconductors, if you watched my video last night, are starting to show some signs of life, and they're starting to favor this exact possibility. Now, at the same time, I take a step back and look at this market, anticipating higher in the dollar, higher in yields, higher in crude. And I take a look at the weekly time frame with the weekly 50 and 200 moving averages, and what I find is, first of all, two significant levels of relative strength divergence going into those highs. More importantly, the last 15+% corrections, the last 4 15% plus corrections in the index all met support at the 200-day moving average. We've yet to test that level. I'm not saying we absolutely positively must test that level, but it continues to support the idea that we could see one final shakeout down towards 34 to 36, and that's where I think we could see the more significant reversal. So that's the S&P. Again, we remain ready to pivot. I presented over an hour of candidates in the semi-space with our clients the other evening. A lot of charts moving out there. I'll give you a taste of a couple of them here. First, let's take a look at the SMH. The SMH, as mentioned from the video last night. Here are the traditional technicals. Downtrend line resistance, as you can see here in red, March high through the June high. And in addition to downtrend line resistance, we also have what was former support in May and also March, which you can see a bounce temporarily here. You can then see it turn to resistance. And here we are back testing near that 222 handle. So again, get above trend line resistance, get above that previous support, potentially turning resistance, continue above the 50-day moving average, and I think semis have a really good shot at leading this market out of correction and more specifically the rotation back into growth. Here, 5 down, 3 up, 5 down, ending contracting variety diagonal has delivered a sizable move up. Some of the names on our radar, Qualcomm. Qualcomm has a beautiful, beautiful fourth wave coming in here. Wave B was 1272. I was hoping to see C meet the more significant zone near 107. The upper support level was 117. We've seen a nice move up there. That's a name we're going to go to work with at Trading Analysis. And then you can't forget AMD. AMD has such a confluence of fib support offered from multiple degrees of trend, it's not even funny. We have not only blue 4 and 2 equality, meaning wave 4 equal to wave 2 of the same degree, but zooming in on this trend, we'll bring this in 1 degree at a time because it's just really fascinating. We then have Y and W equality. Inside of Y, we have C and W, or C and A equality. And all of this stacks up into the previous fourth of not 1 but 2 lesser degrees. I think that's a very high conviction zone with a potential double on the horizon back to the highs in AMD. So that's it from me. Over to the NASDAQ, as I know there were some requests there. In the NASDAQ, same situation. I am still considering the possibility that we've got 345 left to go down towards 10,335 or 355. If we start to break above the 786 here, I've got to throw that wave count out the window and I've got to be ready to pivot to the long side of the trend. And that means we've got 1-2, 1-2 in the making and could see an explosive breakout. It's difficult to make that assessment in the face of earnings and in the face of the July Fed decision. So we're going to take this one wave at a time and check us out, anytimetradinganalysis.com. All right, that's it from me today. We'll get
Speaking
Mr.
of
Terry
earnings,
Long. Yeah.
Talk about Netflix.
Netflix.
I saw Netflix up after earnings last night. I didn't look at it this morning to see if it held on to those earnings, but
it's still trading 210. It's still trading 210.
okay.
Yeah.
Okay. Well, usually, what is it? 9 times out of 10, Netflix was down after earnings report. And, I mean, maybe the bottom is in, Bennett. Who knows?
Hey,
we're about to find out. We are very
That's right.
close to finding out, as you can see from Bennett's 2 primary wave counts there. If you're a more conservative trader, wait. Don't jump in. If you're a more aggressive trader, jump in by all means, but be sure you set your stop levels appropriately.
Absolutely.
All right. Give me the screen, Bennett, and I'll take it away.
All right, sounds good. Terry's going to take you through sector focus and Optimum. We'll be back to take you through macro and wrap up.
All right. Hello, traders and investors. I'm Terry Long at TradingAnalysis.com here with your weekly sector focus. So the markets must be liking what they see in the initial rounds of these earnings reports as the indexes rebounded dramatically yesterday. Now, last week, ahead of the Q2 earnings reports that started on Thursday, we saw the indexes actually move lower each day. And Bennett, the gap down actually occurred on Wednesday, but we did get a second gap down on Thursday. So yeah, so Monday and Tuesday last week started pushed lower. Gap down on Wednesday, but finished higher. Gap down on Thursday and finished higher. And then Friday, after JP Morgan and other bank earnings started coming in, that's when we got the pop right here. So the last week, the S&P netted a 0.93% decline, and the NDX was down 1.17%. Now, that's after having actually been down more than 3% midweek. Last week, the energy sector was the worst performing sector, down 3.33% as crude oil fell and remained below $100 a barrel. It settled Friday at 97.57. Staples was the most resilient sector with just a slight positive gain of 0.05%. Utilities with a 0.09% loss. So those were almost totally neutral last week. Now, just below that, though, we see technology and healthcare shares with 0.37 and 0.41 losses. So outperforming everything here, real estate too, I believe, outperforming the S&P last week, even though they were down. Now, financials, the financial sector, it fell in line with the S&P. It was down 0.94% on the week. All right, let's fast forward to this week. Let me just pull this over and I'll give you a little side-by-side comparison. This is Monday and Tuesday's price action. And this was last week's here. So let's close this out. Let's start talking about what's happening here. Energy making a big rebound, obviously. The energy sector jumping 5.51%. It's up pretty big, pretty significantly. Looks like it pulled back some overnight session as the markets, pre-market trading is already coming into my table here, but still up 4.36%. So let's take a look here at the S&P. So Monday wasn't a big opening. Monday morning and throughout the days, the markets actually lagged, but then stocks suddenly reestablished the upside momentum on Tuesday, seeing the S&P close up 2.76% and the NDX closed up 3.13%. Like I said, energy vaulted 5.5%. I don't think the energy is down and out just yet. Consumer discretionary sector, it came in with a 3.36% gain through Tuesday. You can see that right there. In the communication sector, 3.48. So here's technology. Technology, the XLK itself is up only 1.9% for the week, but the week ain't over yet. Underdogs this week is healthcare and utilities. All right, so let's move on to our relative strength sector leader scoreboard here. Now, in this relative sector scoreboard, we track the relative strength ratio, across the x-axis, and the relative momentum ratio across the y-axis relative to the S&P 500 with all 11 sectors. Okay, energy sector has been in a long decline. It has continued to accelerate. Actually, this vector here, these are 1 week tails. You can see those little dots there. Each one of those line segments is 1 week. And we are actually accelerating to the southwest. Its relative momentum for the energy has declined to about 94.5, while its relative strength is down to 112. All right. All the other sectors, healthcare is the lone holdout now in the leading quadrant. The industrial sector finally breached down here into the weakening quadrant this past week and left healthcare all by itself. Now, as I mentioned, the way this chart has to work, you have to keep it in balance of if the origin of the S&P is here. You kind of have enough market cap mass to the upside, to the downside, to the left and the right to keep all this in balance. If we've got utilities, staples, materials, and real estate, and now industrials exiting the leading quadrant, something is coming back in. And that something is technology here. We already see it up into the improving quadrant. The communication sector is also starting to move. Now, still down in the lagging quadrant is the financial sector and the consumer discretionary. Let me just animate this a bit. Let me show you this past week. I guess I had it staged a week ago. So you saw that last week. Now look, there's your animation. Look how the energy has now declined down to the 112 I was mentioning. Okay. And you can see the continued motion. So that continued motion, we expect to see the technology, the communications, the discretionary sectors continue to improve and outperform the S&P over this period as all these other sectors start to fade. Now, before I leave, I would like to show you one of my new favorite scans in Optima. You know how I tell you stocks heading east are gaining relative strength and stocks heading north are gaining momentum? So what if we could scan the S&P 500 to find stocks behaving just in that manner? And how about we also narrow that list, not only those in the weekly RRG, but also those in the daily RRG. So here's a scan I ran this morning, and it's come up with 12 or so stocks in this list that are currently demonstrating both rising momentum and rising relative strength in both time frames. Let me pull that up here for you in a relative, whoops, let me try this again. Let's pull that up in a relative rotation chart. There it is right there. And let me zoom out. This is the weekly time frame. Okay? So the one I normally track for our swing traders. But you can also take a look in the short term. So here's that list of 12 stocks. Feel free to take a screenshot or just come back and pause the video once the recording is finished here. So we've got Solar Edge Technologies and Synopsys way out here in the leading quadrant already, along with Copart, TJ Maxx, Visa, MasterCard. Everything here you'll see with the arrows are pointing to the north and the east. Keys, QCOM, and what is this, Citigroup. All of these have rising blue improving weekly trend vectors. That's another good sign. Norton LifeLock down here in the lagging quadrant made a hook and now has new rising vertical momentum. Let's go in the shorter time frame and let's look in the daily time frame here, where each one of these line segments is a day and not a week. And so 5 of those represents just 1 week's movement. Those same stocks on the daily time frame are also pushing strongly to the northeast. Okay, so I want you guys to add these to your watch list for the next set of markers when the upside rally resumes. So that's a brief look I've got at the current sector situation. Now, we'll have much more to share in our members webinar coming up at the top of the hour. Now back to you, Bennett.
Very good. Much appreciated, Terry. Thank you so much. As always, if you're interested in downloading one of Terry's latest S&P scans, visit tradinganalysis.com/market-scan. I just put the link in chat. We're going to be putting out several more of those. So if you didn't get the email, we would encourage you to sign up for our mailing lists. You can expect to receive anywhere from 2 to 4 emails per week, all market-related content. Check it out anytime. All right, Alex, sir, we're going to pass the screen your direction. We're going to get you set up here. Take us through the macro scene. Perhaps you can hint at a little crypto as we're going to be back tomorrow for Crypto Lab. And all right, there we go. We got your screen share up.
Okay, so let's hit it.
You ready to rock? All right, take it away, sir. We'll be back on the other side to wrap up. Markets are open in just under about a minute and a half.
Hey guys, let's quickly review the macro theme. So latest announcements from the couple of market participants that Fed is going to raise rates following the latest CPI around full 1% has been kind of a backstopped by Jerome Powell. Most likely, he said 0.75 move will be on the table. So on the Fed CME tools, also 0.75 move is almost fully priced in. So if we look the rates on the upside, we started to consolidate here. So I think maybe we're going to do a small triangulation and maybe one more move on the upside. Overall, I think technically we are in the latest stages of this move on the upside. I think we have seen the highs for the CPI. I know that's a kind of a brave statement, but if you look almost on except oil, which has also fell, it's recovered a little bit on the latest announcements from Russia. They want to change the currency and accept even other currency than ruble in oil. I think that the CPI will go lower and we will make some pause in rates as that was a thesis for the last couple of months looking at these charts. So rates, 10-year yields, US 10-year yield still in consolidation. We don't have enough evidence to actually count 5 ways down. We might have it in some type of an expanding diagonal, but still that is not the case. So we have to be cautious and observe this as a consolidation for now, with a small pop-up on the upside where this complete segment will actually make a pause and move lower. So in European front, the ECB is already announcing most likely a 50 basis point move. I think ECB meeting is tomorrow. So I do expect ECB to either announce the exact date or a hike rates tomorrow. We have seen the equality, and even we traded below equality from the US dollar and the European currency euro for a brief couple of days. So I do see that on dollar index, which I will present you the next, but this is the 10-year bond, which starts to consolidate. I do think we are in the new uptrend in the rates in Europe, and actually we do see a character of this move up as a third over third, usually we call it, because the character of verticality and strong, very quick uprise give us this small clues where we are. So we do have potentially some type of a consolidation in a wave 4, up in 5 to complete the wave 3, a pullback in a wave 4 and 5. So we will stay in a modest range up and down, and when this is finished, because the Europe is in a different situation than in US in regards of moving rates at a speedier pace, I would say it's completely guided by surroundings. And as we know, Russian-Ukraine conflict is still raging in the Europe. So I think situation over there is much more different than in US. But we will see some moves from the ECB, which actually is expressed on this bullish chart for this 10-year bond yields for the next couple of months. Dollar index is still moving on the upside. We have a small pullback. And I don't think this is still enough of the evidence that this cycle in dollar on the upside has finished. We have also on this weekly chart reached some of the higher levels on the RSI with some couple of divergences, but I still think this is not enough. We need to see a full move below this 101.70 to actually consider this weakening of a dollar as something more serious. Until we trade in this range here, small range, I do think that we might maybe begin some type of a triangulation or a complex corrective pullback back to this 103 in US dollar before we start moving higher, because we need to look for a 5-wave sequence. And for now, I don't want to actually put this wave 4 here. I think we will spend a little bit more time in consolidation, move up, and then this cycle will be done in a couple of months. And I think we will move to some type of a corrective pullback, either bigger or smaller. That is left to be seen. Commodity index, Thomson Reuters commodity index has something which looks like a 5-wave move to the downside. I do think move down in commodities has started. We have seen that on many commodities, either metals or soft commodities. So we have seen soybean, corn moving down, gold moving down, gas, net gas moving down, overall oil moving down. So most of this commodity, copper is moving down. So most of these commodities are moving lower, so that is expressed also here on this Thomson Reuters index, which I think has a couple of months time to complete this correction, and that will also be paired with rates and inflation lower. And for now, I'm still going to hold this thesis that we will see a pause in rates and in inflation for the next couple of months. Oil is bouncing from our support level. We have hit it 94, 95. This still looks like in consolidation and maybe even ABC pullback with an outlook on the upside. We still don't have any signs or an impulsive move further, breaking these support levels further lower, which will bring some other wave count implications. So for now, we have to stay patient. This is the longer term chart of oil, which I still think it's going to go higher for the next couple of years, of course, with some pullbacks. But the overall chart, I think, doesn't give any signs that we are breaking sharply lower in the oil price, which will actually endanger and maybe put this high as the overall high in a five-way move. So I still don't see that. So I'm still going to stay very cautious and slightly bullish on oil prices in the next couple of months. Net gas has bounced up. This is, I would also not like to anchor a wave 4 here. I think we will have a longer affair in the wave 4. This is maybe some part of an ABC or some type of a triangulation. So I mentioned seasonality, of course. In a month or two, we are going to be in September, October, where I do think potentially from this ABC pullback a little bit lower in a wave 4, net gas will continue higher towards this 14, 15. Of course, November, December, January, February is winter, and the gas will be consumed much more for heating factories, apartments, and all other stuff. Copper is still moving lower. We have a small pullback. Copper is a very good economic barometer. And as you can see, we are started to price in on a copper price this demand destruction provoked by the rates moving higher. So in that respect, I do think this is just a small correction. Maybe wave 3 is over, but I don't see a wave swing, 5-wave swing still finished. Maybe a small upside move, one more push, and then maybe we can see that the 5-wave sequence will be done, and then either a continuation on up or a big correction on the upside in copper. Soybean is moving lower. 5-wave sequence is done here, so we will see some type of an ABC pullback down to this area. So as you can see, as a conclusion, rates are still in the bond space, are kind of finding a small support levels, potentially one small move on the upside, commodities moving lower with an exception of oil and gas, which I think probably, especially for gas, is just a pullback. Soft commodities moving lower, gold is moving lower, copper is moving lower. So most likely these figures will be factored in into the next CPI report. So let's switch to gold and silver. Gold has been moving lower. We have been, as you know, for most of the time, pretty unconvinced by the gold reaction in February. We have held also the bullish wave count, which was, as you can see, invalidated even a couple of weeks back. So we did switch to our preferred scenario towards pairing the dollar and gold as well. So I do think gold will reverse when the also dollar find its highs. And as you can see here, we do count this as some type of a flat or a complex correction, and we are already approaching the levels where we have a strong fib ratio. I don't think this is down.
Can we zoom in on that, Alex, please? Get down the daily. Sure. Let's take a look. Drop it down to the daily, and let's take a look at where we're at.
Yeah, I do think that wave...
You've got some key fib levels down there. I'm finding hard to read on my screen, so that's what I'm asking.
So what would you like?
Your fib levels, your fib support zone. I'm finding it hard to read those labels.
Yeah, support zone stretches from 1,660 to 1,720. So we are still not there. We are touched actually the first support zone, but I do think this is just wave 3 lows. We're going to correct a wave 4 and move down in a wave 5 to the secondary zone, which will be around 1,650 to 70. So that is the fib cluster I have here. Yeah, so overall, this should be some type of a 5-way move to the downside, completing this correction as a flat. Most likely, as the time ratio suggests, that can be around, let's say 11 or 12 of September. So it means in a month and 12 days, a little bit more. So yeah, wave 4 still ongoing on gold. Of course, we're going to seek some type of a confirmation and then a pullback, which will set up the gold to move further higher. And also silver is on the same front. We have been looking silver also to go lower, as you know. So I do think also silver is in a move to the downside. I have also a fib ratio zone starting from 1556 and finishing around 1673. So I think some around these levels, this will be the end of this silver move lower, and then we should see some type of a impulsive move on the upside and a continuation further higher. Cryptos, we're going to talk, of course, a lot about that. Ethereum clearly respecting the zone, going further higher. We are long Bitcoin with our members. We are trading around 24K currently, so on a higher time frames. We are looking for a break of this very important 200 moving average, which we did today, as we did many times or a couple of times as before when we actually penetrated this. So lots of fib ratios here, which I will show tomorrow why we actually thought that this will be the end. Of course, this still needs to develop in a 5 waves, but this break of especially weekly close in 2 days over this 200 moving average will be pretty significant. Ether is already trading a couple of days above it, and a couple of other cryptos are showing the same. So I think at least we're going to see a bigger correction. Even if you take this wave 3 here and formation some of a new triangle, this will be the lowest point. So I think Bitcoin will continue to go higher as the stocks are doing the relief rally. And of course, we will see what the Fed will say. But I think this is a start, at least, of a bigger correction in cryptos. So back to you, Bennett.
Very good. Much appreciated, Alex. Thanks as always. Again, tomorrow morning, 9 a.m. Crypto Lab right here on the Trading Analysis YouTube channel. Check it out. Appreciate you all tuning in. If you did enjoy the content, please subscribe with notifications. Give it a thumbs up. Lets the algorithm know to distribute it accordingly. And you can give us a test drive anytime, tradinganalysis.com. Members, we'll see you in about 18 minutes for our weekly member webinar. Viewers, traders, investors, appreciate you all joining us. We'll be back same time, same place next week, and of course tomorrow morning. Terry, Alex, excellent work, and we'll have a good one.
All right, see you guys later.
All right, take it easy. Catch you next week.